Hello, ladies and gentlemen. It's the Forex billion dollar, and today we're going to move a step further and talk about something that we have been talking about. Let me not say we have been talking about, but I have mentioned it a number of times in the lessons, starting from the terminologies, and in one of the classes that I have been teaching, and now we're going to look at it more in detail, and this topic is called support and resistance in price action. Now we're doing price action, so we shall go deeper into understanding support and resistance. So without wasting much of the time, let's get started. So what is support or resistance? So let's redefine support. So a support level is a price level where buying is strong enough to interrupt or reverse a downtrend. Remember, it should be a level that is strong enough to interrupt or reverse a downtrend. So price should be going down, and then it should meet a level that is strong enough that will cause that downtrend to change into an uptrend. That's what a support level is. Now, resistance, on the other hand, is a price level where selling is strong enough to interrupt or reverse an upward trend. So price is going up, but it should reach a level where it is very strong that price can't pass that level and has no choice but to reverse and continue going down. So on the charts, when you open, there are price points where price is always reversing, right? Now, some of these levels are called support and resistance levels. Some of them are called demand, supply and demand zones, and all that. We shall learn about all that later on. But today, let us focus more on support and resistance since we are learning price action. So if you are going to be a price action trader, this is a concept that you'll be using most of the times when you're trading, right? So when it comes to support and resistance, there is two types, should I say, or three types. The first one is the normal horizontal support and resistance level, so meaning horizontal, sideways, right? Then there is also what we call a flip zone, which is support turning into resistance or resistance turning into support. Then the third one is the diagonal support and resistance, right? Which is commonly called trend lines. So trend lines are merely nothing but support and resistance, right? Now let's talk about each one of them. So we're going to talk about horizontal support and resistance. Then for the trend lines, we're going to have a whole different lesson about them. So these are levels that you can usually see. They are sideways. And let's look at an example. So you have price moving in this pink line. This shows price movements. So we have a point where this point at the top is called the horizontal resistance, and then this point at the bottom is called horizontal support. Now this one is being called support because every time price reaches that point, it is reversing. So at this particular point, we are safe to say we buy at support level and we sell at resistance. Why do we sell at resistance? It's because there's a high chance, because looking at what price has been doing here in the past, there's a high chance that when it comes back to this level, it will now change and continue going down. So this is why in a place of horizontal resistance, you need to take sales. And in a place where we have horizontal support, you need to take buys. So in short, we buy at support and sell at resistance. So this is a good example of support and resistance. Now, when we go to the live charts, we can see that here price reverses from it and it goes all the way down. And as we can see here, it reverses, here it reverses, here it reverses. But these are minor levels, right? The major ones are, you see, when price comes back to this point, it reverses again. It goes up again, almost to that point, it reverses. Goes up again, almost to that point, and reverses. So what does this tell us, right? What it tells us is that support and resistance is not just a single line, but is a zone. Because sometimes, if you draw a line, sometimes it won't touch the line. Sometimes it will leave a small space like here, also like here, and it will reverse, right? And we can see here, down here, it's not respecting this point, but we can see from here, price has been failing to go beyond this point, right? It has been failing to go beyond these points. So now this becomes our valid support level, and the one that is at the top becomes our valid resistance zone. So every time when price comes back to this level, we sell. Every time comes back to support level, we buy, right? Yeah, right. So how do you identify support and resistance levels on your chart? So in order to show you how this is done, I want to demonstrate something. So let's do this. Let's say price has been moving like this, right? Let's say like that. Okay, let's say something like that. All right. Okay, so when you try to draw a line from this point touching this point or this point, you see that there are points that are going out of range, out of this range. Now how do you deal with this? Now how you deal with this is that every time you are marking a level of support and resistance, you need to mark it as a zone. Now let's do this. If I mark it as a zone, you see the difference? You see the difference? If I mark it as a zone, you see the difference? So what this means when we mark it as a zone is that anywhere inside this zone, you can take a trade, right? Anywhere inside this zone, you can take a trade, right? Yes, so this is what I mean by price is not, support and resistance is not always a single line, but a zone. But there are times when you just draw a line, right? Yeah, so now let's understand where you draw a line and how do you spot support and resistance. So let's say in order to spot support and resistance, you need a minimum of 2 or more points. All right. So let's say price has moved like this. So for you, once you have 2 points, you do this, you mark this as your zone. And then at the bottom, you have 1, 2, 3 points. This becomes your zone, right? This becomes your zone. Now, after that becomes your zone, let's say this one, right? This point, all right, 1, 2, then again 1, 2, then 3. So when price is coming to touch the zone for the third time, this is where you now take a buy. So at the point here, at support, this is where you take a buy. So you will take a buy here. And now once you take a buy, what you're anticipating is that price will now change direction and go up. And once it reaches here, ladies and gentlemen, you will be taking your profits. So now this is where you put your TP. TP as in take profit, right? We have learned about these types of orders. If you haven't understood them, kindly just check the video. So now it is not wise to put the take profit exactly in the level like that. What you need to do is, one, slightly before that zone, you put your line like that, and this is where you put your TP. Now the reason why we're putting our TP there is because sometimes price would be coming here and it does not reach that level, and instead it begins to reverse from here and it goes down. So again, once price reaches here, you take a buy, right? Yeah. Now let's say you have taken a buy from here, right? Where do you put your stop loss? So let's say you've taken your buy there, and your stop loss now would be slightly below, like this. This is where would be your stop loss. Now the stop loss, you use your you want to determine how much you're risking. That is something we are going to learn. So your stop loss would be there. SL simply stands for stop loss. And then you leave room. You ensure that you leave room, even so that even if price has to go back down a little bit before going up, you would still be safe. So it goes up, and of course, once it reaches that point, this is where your TP would be. Now, in a case whereby it now comes to this point, you can now take a sell. Now, I'm teaching you how to trade based on support and resistance. You can now take a sell in that zone. You can now take a sell in that zone, right? Yes. So this is why we said we buy at support and we sell at resistance. Now we've also understood how to mark support and resistance levels. I said, one, you need a point where price has been reversing the most. You need to have at least 2 points for you to mark a level of resistance. For example, 1, 2, and then I marked it as a level of resistance. 1, 2, 3, a level of support. That is how you mark these loans. Now, so if price has been going down for some time and it hits a price level and bounces up from there, that's called support level. Price goes up, hits a certain level or zone where it cannot continue upwards, that's called a resistance. Any further and it cannot continue upwards any further and then reverses, it's called resistance level. So when price heads back down to the support or resistance level, you should expect that it will be rejected from that level again. The use of reversal candlestick trading or on support and resistance becomes very handy in these areas. So I have just taught you candlesticks, reversal candlesticks, continuation candlesticks. So this is now how you use these candlesticks together with support and resistance. So let's say we have this point as our resistance and then this point as our support. Now, how do we use support and resistance together with candlesticks? How do we use support and resistance together with candlesticks? Let's say price reaches here. So now it's not just any area that you would see a candlestick and then boom, you take a trade. Let's say it reaches there and it gives you this candlestick. It gives you this candlestick. It gives you this candlestick, right? Candlestick of this sort. This candlestick, ladies and gentlemen, is a reversal candlestick. So once price reaches a resistance level and gives you this candlestick now stands as your confirmation for a sell entry. So you would now take a sell. So this is how you combine support and resistance together with candlestick patterns. So every time when price reaches a resistance or a support zone, you should be looking for a reversal candlestick, because already you're expecting that price should reverse from here. So you look for a reversal candlestick and then you enter a trade and then boom, voila, you have made money, right? This is what we mean. All right. So let's go deeper, ladies and gentlemen. Let's go deeper and understand these things in detail, right? So now, significant support and resistance. So we should understand that it's not every level of support and resistance that is strong enough to hold to hold the market and then cause a reversal. So now, there are a few points that you can take note of if you want to spot significant support and resistance. Now, these points are: one, price should have tested the level more than twice. So as you can see, 1, 2, 1, 2, 3. So this is a support level, and then from here we're expecting a buy, right? So now there are times when price breaks out. So what we mean by price breaking out is price passing a level of support or resistance. Now let me show you. Let me just show you. For example, if let's say price is moving like this sideways, we'll start with the horizontal since we are talking about the sideways, right? Okay. Now let's say you mark this zone as a zone of let me just now do this. If you mark this zone as your zone of resistance, so once price goes up like that, that is what we call a breakout. Now what we expect is price to come back and test this level, and then it can continue going up. So this is what we mean by price. This is the resistance turning into support, because here it was supposed to be resistance and be able to reverse price down, but then it's been broken. So once price comes to test, it will make this zone as a point to go up. So now a point where price goes up is called support. So now resistance has been turned into support. So this is one of the things that we can be expecting as we are trading support and resistance. Now sometimes support and resistance isn't always there sideways. Sometimes it will be going up like this when you have an uptrend. When you have an uptrend like that, when you have an uptrend like that. So equally, this is a level of resistance. This is a level of resistance. This is a level of resistance. Now let me just, for the sake of this class, let me just do this. So sometimes, ladies and gentlemen, when a level of resistance, this is resistance, this is, yeah, when a level of resistance has been broken, so we can see here price went beyond. So if it begins to come back down, it can now come and make this level that was initially resistance to turn into support, meaning a turning point, and then it goes up again. It breaks this zone, so it will come and retest this zone, go up again, break this zone, it will come retest this zone. This is what we mean by support becoming resistance or resistance becoming support, right? Let's just look at it. So there are many traders that do not realize that in a downtrend, when support level has been broken to the downside, it often tends to act as resistance level. Here is an example. So we see price moving like that, and then it breaks. You can see here it tested, and it, you know, again, and it actually comes and tests again. So meaning this level that was resistance now becomes support. So you can use this technique to your advantage. When you see a breakout like this is what we call a breakout. When price comes back here, now you'll be taking a buy to, in anticipating that price would be going up, because now it has changed how it was moving. We have learned about movements of the market. We learned about, uptrend, downtrend, and all that. Sometimes when it does that breakout, it comes to retest a level that was significant, that was, holding price from exceeding that point. Once that point is broken, price usually comes to retest it. So another example is we see this level of resistance, and then this is a level of support. We see a level of resistance being broken, and then price comes back, touches that point, and then it uses that same point to as support, and it begins to go up. So every time when you see resistance or support being broken, ladies and gentlemen, prepare for a retest where price would come and then make that point that was initially resistance turn into support, right? Yes. Right? Yes. So that's that, ladies and gentlemen. Now let's move further, and of course we can see this is a resistance, and then we see price breaking that point. It comes back, and what does it do? It retests that level that was initially resistance, and then it makes that level support. We can see it breaks and it comes back to that point which was resistance and goes up, and then we see here another point which was resistance. Here it is being made as here. So that's that, ladies and gentlemen. I hope you have understood the drill. Another thing is, in a downtrend, you see this point was initially support, and then it gets broken. Price comes back, and then it uses that point and to turn into resistance. It goes down, it will come and use that point to turn into resistance, and it goes down again. It has broken this level that was initially support, and it uses that point to turn into resistance, and it continues. This is how price moves when in a downtrend or in an uptrend. So when you understand support and resistance, it can help you come up with points of interest. You'd say, okay, since this point was initially support and it's been broken, I'll wait for price to come and retest this same area, and I'll take my sell position from there, and then boom, price goes down. Right? It's as easy as that. Train your eyes to be able to look at things like this, to be able to judge situations like this, ladies and gentlemen. So, of course, in an uptrend, yeah, this is what I've already shown you, right? Like that. So the market won't always be perfect as this. Sometimes it will, sometimes it won't. So you see that, this point was resistance, it's broken, retest, just like that. But it's not always that it's going to retest. Sometimes it may not retest, it may just continue and going, and then it uses another point. But if it does, ladies and gentlemen, you know what to do. So it's better to draw support and resistance lines, or rather zones, across the edges of congested areas where the bulk of the bars stopped, rather than the extreme points. Okay, so here are some of the trading rules you can follow while trading support and resistance. I have to state that these are just some of the rules. Feel free to create yours and add more. So whenever the trend you are riding approaches a support or resistance level, you can either adjust your stop loss or take profit to protect your account. So support and resistance are important on long-term charts than on short-term charts. So on longer time frames like H4, H1, they are more important than on the 1 minute time frame, right? Or on the, so if you're on the H1 and somebody's on M10, the one that is on H1 has more significant points than the one that is on M10, but it doesn't mean the M10 doesn't work. It can work, right? So if price dip below support and then rally back into the support zone, that means there's a chance that the sellers have lost, and then price would be okay, have lost their chance. The support resistance level must be tested at least 3 times for it to be reliable. So if you want reliable zones, wait for it to be tested at least 2 or 3 times, ladies and gentlemen, right? Yeah. Okay, so basically that's that. Now before we can go further, allow me to just check through and just be able to plot support and resistance levels on the market. So we can see here the market has been moving like this, and then we can see that here price has been respecting this area a lot. Now if you draw a line like this, look at this. If you draw a line like this, we have too many areas that are on the extreme. So if you draw a line like this is better than this one. So this one, we get rid of it, and now we'll now consider this one as our zone, as our resistance zone. Now we can see here, we can see here price reverse from here. 1, we have this point. 2, we have this point. 3, we have this point. 4, we have this point. 5, we have this point. 6. So you see, in as much as this was the extreme, so if you are marking support and resistance levels, we'll use this zone. You can see the reason why we're using this zone and leaving out this one is because we can see price has been obeying this area a lot, and then here it comes, boom, it just touches that zone and it continues to go up. So now this is resistance, this is support, right? Let's try and observe other points. We can see 1, 2, 3. You see this point, right? That is resistance. Again, this one was extreme, so we ignore it, right? We ignore it. That is bound to happen. It can happen. Now look at the bottom here, like that. 1, 2, 3. You see these points, you can now draw. This is your zone. This is your zone, right? So if price were to come back here, you would have taken a buy, right? Yes, that is support and resistance for you. You can see here, here, yeah, you can see here price has been respecting this a lot, and then after it breaks, look at that. This is what I was teaching you. After it breaks this level, 1, 2, 3. After it breaks, what does price do? You see, it breaks like this, and what does it do? It comes back and then continues to go down, right? So now this is the point now where we say this level of support has turned into resistance. So here you could have taken your trade. Right? So you see, this is what I have been mentioning. So every time when you have a break, right? So you see here, it's just straight here. You can't draw anything here. So here, can you do anything? Yes. Are you able to see support and resistance zones? We have this point, this point, this point, this point. So you can see that here, this is a strong zone. And then when we see price didn't really retest, but then the retest that occurred is just one candlestick coming there, and then it goes down. So you see, that is a point of support. So you can have a good support zone, and then you may not really have a good resistance zone. You can see we have that extreme, but you see, you get the point, right? So that is support and resistance level. You can see this is, you can see that, okay, you can see that. All right, yeah, so we can see this point. So sometimes you may have points that are inside, sometimes points that will be outside the structure, right? Outside the structure. So for example, like this one, you see, we have an outer resistance zone and then an inner one. So inner, then outer. So you can have an outer support and resistance zone, and then inside you can still have minor ones. For example, even these are minor zones, right? Minor, right? You see how it's making sense. And then these are all points of interest, right? And when you draw these zones, they are able to help you understand how price is moving, right? See, right? So I have been able to identify support and resistance, and this is how you go about it. Remember, you buy at support, you sell at resistance. How do you confirm your trade? You actually wait for a candlestick, a reversal candlestick, either on these levels, and then you can take your trade, right? So that being said, ladies and gentlemen, we have come to the end of our class, and then I shall meet you on the next lesson.